Hello, welcome back. So as you're seeing right now in the pre-market, Alibaba is up 7%. It looks like it's a sympathy play to what is happening with JD.com and generally speaking the news that are coming out of China. We can take a little bit of a look at the stock news here. You will see that JP Morgan also upgraded China's tech sector. They say it's time to buy these stocks after they made this little typo about China being an investable. Now they want everybody to buy China because this is how it works. This is how you can make money. The whole Chinese market has been beaten down, has been beaten absolutely down, and so it's now time to get some money back from this happening. So, before we continue with examining this kind of article here, which talks about the upgrade in terms of China and Alibaba, I wanted to take a first look at JD, which also had its earnings report. Now, I'm going to be making a separate video about JD because I want to analyze what is happening with the company. But you will see that the stock actually jumped after revenue growth despite China lockdowns here. And so, if you take a look at the stock analysis chart here, you will see that the pre-market, they're about 9% higher right now. We'll see what is going to happen when the market opens up, but it's important to know what actually initiated this whole thing. It's basically JD.com for now and JP Morgan actually saying that China now is more investable than ever, pretty much. Okay, so let's take a look at the article. What do they say? So JP Morgan upgrades China's tech sector, says it's time to buy these stocks, and this is why you're seeing some of these starting to soar right now. Analysts at JP Morgan have raised their ratings for the stocks of 7 internet firms, including Tencent, Alibaba, Meituan, NetEase, and Pinduoduo, from underweight to overweight. Very interesting. After they actually considered about what was it like? In March, like a couple of months ago, they considered the whole tech sector uninvestable, is what they said back then, and then they came out and said, "Whoops, we made a typo. We didn't mean that." So you will see here that JP Morgan has upgraded all these tech stocks on the back of diminished risks just 2 months after calling them uninvestable here. And in a note that they published, the bank's China internet analyst Alex Yao and a team said significant uncertainties should begin to abate on the back of recent regulatory announcements. And if you have been following this channel, you know that we have been talking about this happening before it happened. Like we have been talking about it like a month ago or so. It's telling you how all these news are going to start getting positive all of a sudden out of where you least expected it. You're slowly starting to get some positive news about China and about Chinese companies like Alibaba. And eventually you're going to be seeing the whole Chinese sector, the whole Chinese market soaring, because again, that's how you make money, and people like hedge funds and institutions know the story, know the drill. And the best way to make money is completely annihilate a sector or a market segment and then pump it up. That's how you make the easiest money, your money the easiest way. And this is what's happening with China right now, and this is what will continue happening in the next months or so. So, of course, you can see here that there are some concerns over a higher interest environment. This is concerns that have to do with inflation, concerns that are worldwide, and they do play a role in stocks. But what we are doing here, and what I have been talking about pretty much, is making sure that you buy the best companies, the ones that have been either very much beaten down and their financials are great, or they are overall great companies that are doing well financially. But in the case of a company like Alibaba here, you will see that their financials are absolutely stellar, and we have talked about them many times in the past. We will probably do a rehash when they have their earnings report very soon, but I'm also going to be making a video about JD.com, in which I'm going to talk about their earnings and about this company and actually analyze it with our tools here, with our stock analysis tool and our stock evaluation tool. We will kind of go through that in a separate video. But for this one, I just wanted to keep it to Alibaba and kind of show you here what is going on with the company And you can see here that it's already trending on stock tweets. It's been mentioned a lot because of what is happening right now with JD.com, and the overall Chinese market is the story. And yeah, this is what I wanted to talk about in this video. We are expecting to see the earnings report, which I think may actually have a chance to propel Alibaba even higher. But even if that doesn't happen, overall, I think we're going to be getting a much more positive price action for Chinese stocks and Alibaba in the next months, in the next few months. And especially if there is a little bit of a taming in inflation, I think that would be another extra catalyst that would propel the stock upwards. But we'll see. We'll see. We still have time to see what's going to be happening in this series. Okay, so thank you for watching this one, a short one in which I wanted to talk a little bit about what's going on with China and Alibaba. And stay around, because the next video that I'm making is going to be about JD.com. We're going to examine the financials of the company and what they actually reported and why the stock has been crashing it in the pre-market. Very interesting day in the markets. I have a lot of work, it looks like, today. So thank you for watching this one. Stay around, stay tuned, more videos coming your way today, and I'll see you soon. Bye bye.